In 2025, the world is bracing for what could be the biggest shakeup in global trade. Donald Trump is back, and his plans for tariffs could hit China harder than ever. A 25% tariff on goods from Mexico and Canada, a 10% tariff on China. These numbers might sound like just taxes, but they could flip economies upside down. And guess who's watching closely? India. Trump's tariff war isn't just about trade. It's about power, jobs, and who controls the global market. For China, this means scrambling to protect its exports and avoid an economic meltdown. For India, it could mean big opportunities but also some tough challenges. Will China survive this new economic assault? Can India turn this into a win? And how will these moves change the global economy in the years to come? Let's break down how Trump's new tariff plan could reshape the game for India, China, and the rest of the world. Trump's tariff strategy. Trump's trade strategy for 2025 isn't just a set of random tariffs. It's a calculated move to shake up the global economy. His plan focuses on imposing heavy tariffs. 25% on all goods coming from Mexico and Canada, and 10% on Chinese imports. The idea is simple: make imported goods more expensive, so American-made products become more attractive. But these tariffs are not just about protecting American jobs. They are a tool for pressure. For example, Trump has tied the tariffs on China to issues like the smuggling of synthetic opioids, especially fentanyl, into the US. He's also linked tariffs on Mexico and Canada to their roles in drug trafficking and illegal immigration. For China, this is a massive blow. A 10% tariff on their goods might sound small, but for a country that relies heavily on exports, it could have a serious impact on their economy. Mexico and Canada aren't faring much better. They're facing even higher tariffs. And it's clear Trump is using trade as a way to negotiate stricter border controls. Interestingly, India has been left out of these initial plans. That might seem like a good thing at first, but it's not all smooth sailing. India could face indirect effects, especially as China looks for other markets to send its goods. Trump's strategy is bold and aggressive, but it's also risky. The question is, will it work or will it backfire? Let's see how this plays out in the bigger picture. China's challenges. China is in a tight spot. Trump's tariffs aren't just a passing issue. They're a direct hit to China's export-heavy economy. A 10% tariff on Chinese goods may not sound like much, but for a country that sends a huge chunk of its products to the US, it's a big deal. With less demand for Chinese goods in the American market, Beijing has to figure out how to keep its economy steady. The US is one of China's biggest customers, with trade between them worth $581 billion in 2023. That's where China's new trade plan comes in. To deal with the blow, China has rolled out a 9-point strategy. This includes offering financial help to businesses involved in international trade, increasing export credit insurance, and pushing for more overseas e-commerce sales. They're also leaning on their local and provincial governments to monitor trade and offer support where needed. But even with these efforts, experts believe China's GDP growth could slow by 1.2% in the next 2 years. But that's not all. China is trying to strengthen ties with other countries to avoid being isolated. Recently, we've seen Beijing adopting a softer tone with Europe, India, and even some of its competitors. President Xi Jinping has been busy, traveling to global summits like the G20 and meeting world leaders. The goal is clear. China wants to keep as many trade doors open as possible. Still, not everything is going smoothly. For instance, China's past issues with Europe over electric vehicle tariffs almost started a trade war. Now they're trying to fix things, but it's clear that Trump's tariffs have forced China to rethink its entire strategy. The bigger worry for China is the risk of a multi-front trade war. While they're dealing with the US, they can't afford to anger other big markets. That's why they're stepping back in some cases, like with Europe, and trying to play nice. It's all about self-preservation. So, while China is working hard to soften the blow, the road ahead looks bumpy. The next moves will be critical in shaping their economic future. India's strategic position in the trade war. India finds itself in a unique position in this trade war. While China braces for impact, India is looking at opportunities and challenges. Trump's tariffs are mainly targeting China, Mexico, and Canada, leaving India out of the initial plans. This gives India a chance to strengthen its trade relations with the US and benefit from the China Plus One strategy. This strategy is already in motion as companies look for alternatives to China for their manufacturing needs. Post-pandemic, many businesses are hesitant to depend solely on China. India, with its growing infrastructure and workforce, is an attractive option. Sectors like semiconductors and electronics stand to gain the most. If companies relocate to India, it could mean more jobs and investments. But it's not all smooth sailing. India's export sector could face some uncertainty. If Trump decides to impose new tariffs on Indian goods down the line, it could hurt trade. For example, during Trump's previous term, India lost duty-free access to the US under the Generalized System of Preferences, GSP. This affected $5.7 billion worth of Indian exports. If new tariffs come, industries like textiles and its services, which contribute over $150 billion to India's exports, might suffer. A repeat of such policies could disrupt India's growth in trade with the US. Another concern is the rising dollar, which could increase oil prices. India is a major importer of oil, and higher prices could lead to inflation and affect the economy. Similarly, changes in US policies, like tighter immigration rules, could impact sectors like it, which rely on skilled workers moving to the US. India also has to deal with the overflow of Chinese goods. As Trump's tariffs make it harder for China to sell to the US, Beijing might dump its products into markets like India. This is already happening in the steel sector, where Indian companies are struggling to compete with cheap Chinese imports. Despite these challenges, India has a chance to turn this situation into an opportunity. Strengthening its trade ties with the US, encouraging foreign investment, and protecting its local industries could help India emerge stronger. The key will be finding the right balance between benefiting from the trade war and protecting its own economic interests. Global trade impact and ripple effects. Trump's aggressive tariff policies are shaking up trade across the globe, and the ripple effects are being felt far and wide. Mexico and Canada are among the biggest trading partners of the US, but they're now facing a 25% tariff on their goods. For Mexico, this is a big blow because nearly 80% of its exports go to the US. Economists predict that these tariffs could shave off up to 0.8% of Mexico's GDP every year. Canada, too, could face slower economic growth as trade between the two neighbors becomes more expensive. This isn't just about trade, it's also tied to US concerns about illegal immigration and drug smuggling. These tariffs could disrupt supply chains and increase costs for businesses in both nations. India, Japan, and Australia are also on China's radar as alternative trading partners. While this might boost trade in the short term, it's a double-edged sword. Meanwhile, Trump's policies are influencing global investor behavior. The dollar is strengthening, which impacts oil prices and global inflation. Developing nations relying on oil imports could face economic strain. Even the semiconductor and tech industries, which are seeing opportunities in India, may experience disruptions due to fluctuating trade rules. Beyond these countries, higher oil prices due to a stronger dollar are making things harder for many nations, especially those like India that import most of their oil. In short, Trump's tariff plan is not just a U.S. China story. It's a global reset of trade, with countries scrambling to adapt to new dynamics. The question is, who will adapt the fastest and come out ahead? Conclusion. As we look to 2025, the global trade landscape is clearly in for a bumpy ride. Trump's tariffs are forcing countries to rethink their strategies and alliances. China is trying to soften its tone, reach out diplomatically, and secure new markets to offset US tariffs. India is playing a cautious game, balancing opportunities from the China plus one strategy while safeguarding its local industries. For countries like Mexico and Canada, the road ahead seems tough, with tariffs threatening to disrupt their economies. Europe and other nations may also face challenges if Chinese goods start flooding their markets. Meanwhile, global inflation, rising oil prices, and currency fluctuations add another layer of complexity. The coming years will test the resilience of global economies. Countries will need to innovate, adapt, and negotiate smarter to survive the new trade war. Will Trump's policies ultimately lead to more balanced trade, or will they deepen global economic divides? One thing is clear, the next chapter of global trade will be unpredictable. The stakes are high, and every nation is gearing up for a challenging but defining moment in history. Thanks for sticking with us throughout this video. If you're curious about how these moves will shape global politics and economies, hit that like button and subscribe for more engaging stories on geopolitics. Got thoughts or questions? Drop them in the comments below. We'd love to hear from you. Stay tuned for more.